All right, guys, we'll wait for everyone to kind of filter in as we get started today. So appreciate you guys being here. We've got important updates around a lot of things going on, especially the governor's announcement yesterday and what that all means. So we will get to that, but we want to let everyone filter in the room first. All right, it looks like it's leveling off a little bit, so we'll give it a few more seconds and then we'll get started. So thanks everyone for joining us today. So you guys all know, my name is Ryan Castle. I'm the CEO of the Cape Cod and Islands Association of Realtors, and welcome to our Zoomed In on Real Estate for the month of May. A bit of housekeeping, we are not going to do one in June because it coincides with our week of advocacy where we are going with the Massachusetts Association of Realtors, where we are going to do, like we did last year, we have a keynote on that Monday, the second week in June, and then have meetings, virtual meetings with our legislators that whole week in June. So an email will be going out with that schedule later this week. So keep an eye and tune that, but just a little housekeeping, we'll not do a Zoomed In on Real Estate in June, and we'll be back at it in July there. We've got several guests today, though, and I want to start out with our guest. Since we have so many, go ahead and get into it. We've got Mike Leemeister from Realtor.com to kind of talk to us and update us on what's going on with Realtor.com. They've had some important updates going on and some new things rolled out, so they wanted to make sure you're aware of them and how to maximize using Realtor.com in this environment where I'm sure Mike will talk about it and seeing the traffic, online traffic of home sales. Home searches are just so high right now. Right, Mike? Yeah, I'm sure y'all are seeing that, and I'll turn it over to you for a quick update about what's going on with Realtor.com.
Yes, Ryan. First of all, thank you for having me. Really appreciate it. Spend some time with your group and your organization. I'm coming here from Columbus, Ohio. So we definitely heard many great things about your part of Massachusetts. And I've been with the company 18 years and excited to be able to manage the partnerships and the relationships in Massachusetts. So I'm going to start by sharing an update on our growth. We've had a massive growth year, an all-time high of consumers coming to Realtor.com. We hit 94 million unique visitors in January. And actually, just this past few days, we got an update that we have grown by 16 million since January. We just embarked on 108 million. We don't even have the slides ready yet to present that, so that's phenomenal. We've outpaced our closest competitor, who you might be familiar with, the last 11 of 12 months. And just to reaffirm, our advertising for your listings on Realtor.com is free. And something that is a big focus is to keep the realtor at the heart of our real estate journey. And we share that realtor brand. So the folks coming to the Realtor.com and visiting and seeing the realtor brand is an awesome shared win for both of us. But we've been listening the last year, and some have shared that they see us as no different than any other portal. And I want to just share with you that it's not apples to apples, it's apples to oranges. And we actually have spent the last 6 months creating a new webinar specifically to go over some different items. For instance, we're going to cover who is Realtor.com and what is our relationship with the NAR. We're going to start by going to state associations to put this webinar on. So I'm actually working with your state association leadership there in Massachusetts. So stay tuned for when that presentation will be happening over the coming weeks and the coming months. We're also going to talk about how we differ from other portals. So we're going to provide you clarity on how do we partner with the industry? How are we more aligned with the realtor industry than others may think? And then we're also going to cover everything you get for free. What what are the things that we have produced and the millions of dollars that we're spending to create an awesome experience. How are we driving the buyers and sellers and facilitating that to drive business back to our realtors and agents and brokers? And then most importantly, why does this matter? Why does this matter to you? So we're going to cover all that as part of this Apples to Oranges webinar. So stay tuned for that. I also spent time and wanted to put together the metrics in 2020 for CCIAOR. So we have had a lot that we've done. So if you look on here, there was 527 million virtual drive-bys in your specific Cape Cod Islands Association of Realtors, 527 million walk-bys, and that resulted in 11.2 million virtual showings. Once again, just specific to your marketplace where your listings are. Every agent and broker has access to your own metrics through your own dashboard. So if you want to drill down deeper, you absolutely can. You can come to realtor.com and access that through your own dashboard. This is translated into free leads. We generate free leads in multiple ways. Find a realtor is a very big one, and I'm going to talk a little bit about that momentarily. We track toll-free numbers. So consumers who come to your listings and call on a toll-free number, we track that. Those are free. Rental leads are free. And ListHub, which is part of our network, I actually represent ListHub in addition to realtor.com. We generate quite a bit of free leads through the publishers that your listings are on being advertised on.
Mike, what is a virtual drive-by? Is that like a display of a listing and then a virtual showing is like someone clicking into the listing a little more?
Yeah, so I'll be very clear. When someone comes to realtor.com, and if you look up here, Falmouth, Massachusetts. So if I type
Falmouth, Mass.
Hey, thank you very much. You did get my last name wrong, so we're even. We're even.
Oh, sorry, yeah.
No. We just balance each other out. So when you do a search and you see the listings in front of you, that is what I call a drive-by. So it's no different than me driving down the street when I see all those listings in front of me. And then when I find a listing on realtor.com that interests me and I click on it, that is when I start to take my showing specifically about that property. So 11.2 million showings on realtor.com is what resulted from all the advertising and the consumer outreach and all the things we're doing to try to drive that consumer to Realtor. Once again, realtor.com, which is a shared brand that we have. So I'm going to transition, and I don't know if you have any other questions, Ryan. I know I want to be
No, that was what I just wanted to clarify for everyone what those meant, because they're like, well, I haven't done a virtual showing on realtor.com. How do I do that? So.
Yeah, we have so many terminologies. I mean, I could use acronyms. People talk about clicks. They talk about visits. What matters to agents over the 18 years I've been in the business is how many folks are looking at my home, how many are going inside and taking a showing, how many are raising their hand to ask a question, and how many of those turns into transactions. So if I can help provide some education, I would start by talking about briefly, profiles matter. Don't be a secret agent. I have a little bit of metrics just to provide context. So adding a video to your profile to engage potential clients significantly improves folks that are going to visit and inquire to you directly. Profiles with a photo. So if you have your agent photo, receive 5 times more inquiries compared to profiles without a photo.
And an updated agent photo, not a 1980s glamour shot, right?
That's very good. Ryan is on point. Having an up-to-date photo when I meet you, it does kind of credibility-wise, oh, your photo matches the actual picture. That's great. Including sold data, your organization, your MLS, shares sold data, which is huge because consumers want to know when they're looking for an agent, they would like to see where you've done business. So I'm going to show you an example here in a moment, but I want to show you something that was interesting. I pulled your most recent MLS report. We send an MLS report to your leadership every month. In April, this past April, for CCIAOR, there was 132 free inquiries generated, which means a consumer went to on a profile page on realtor.com for an agent or in that marketplace right there, CCIAOR, and submitted a direct inquiry to that agent, which is a free lead. We do not charge for those. Look at this right here. Only 4% have completed their profile in your organization. 39% have a basic profile. 58% have a incomplete, inactive profile. So if I can help any of you today in my brief time spending with you, is go claim your profile. 132 free inquiries has a huge upside. And I'm even going to take a moment and show you an example of how a great profile looks. So I went and I know I butchered that name, so I won't say it again. So you know exactly. Actually, Ryan, what's the name of that community? You're on mute. Everybody can read lips.
Falmouth.
Yes. So I searched in there and I was able to, I want to get rid of this, it's blocking my capability here. Stop sharing. The thing at the top is blocking where I want to click. Can you believe that? It's not blocking me. Well, how do I make it?
Mike, you're on mute now. Mike, you're on mute again.
You should be able to pull that, whatever, that menu to a different area.
Oh, there it is. Thank you.
Mm-hmm.
You'd think I'd used Zoom before. Us in Ohio, we're not big on the Zoom, I guess. So here's Beverly. Beverly has done a awesome job. I don't know if Beverly's part of this meeting, but you are now. So if you look, she's filled out her profile. She has her description sheet. Because she has validated her NERDS ID, her credentials have been confirmed right here. She has listed all her areas serviced. She has all her specializations. She has a video. I talked about a video and adding a video to your profile earlier. Huge. I can email and reach out to her directly. I can share her profile. I can call her. I can go and look at all her listings. Because you have sold data on here, I can click right here on sold and see any one of her properties. When I go to any of her sold listings, she's getting complete attribution at the top, both the seller agent and the buyer representative. So that, I wanted to reaffirm that for you. When you're talking about profiles, that is huge. So I'm going to go back to this presentation.
Hey, Mike, I've got a question that came in. I wanted you to answer, and maybe me and you can follow up to make sure it's doing right too, though, is, we have teams within the MLS, and I don't know if those sold data is actually filtering to their individual profile. They're asking about that. And so I think probably if it's not, you and I can work together and make sure it's coming in right?
In my research yesterday, Ryan, it's relevant. Clay Realty Group and Steve Clay is a team. And I went, and I'm just going to verify it live with you. That's why I did my research in advance. So if you have a team, you can have each of your team members affiliate. So I'm showing you this live on our site. So this is all of Steve Clay's team members right here that have affiliated with his team. When I go over here to the sold listings, I actually picked one of the sold listings last night, and it gave attribution back to his team member right here, David Levinson. I don't know if David's on the call, but yes, team members will get attribution for their sales, even though they're under the team. Hopefully that answered that question in real time, and everybody that heard that understands it. Okay, so I'm going to bring this home because I know I wanted to keep this as, to 10 minutes, but I think I'm a little over. How do consumers find your Realtor.com profile? Number one, when they go pull up your listings, they can go on any of your listings on Realtor.com. If you've claimed your profile, we highlight your profile, your name in blue. We put the Realtor symbol, Realtor brand right next to your name. I can click and go right over to that listing agent's profile on Realtor.com. They can go to find a Realtor, which I just showed you. I can type in any community, any city, any zip code, find you that way. We also have a lot of folks who search on search engines. Because we have so much traffic, that ranks us high. So when I type in Ryan Castle, Cape Cod, if Ryan has claimed his profile, he will show up at the top of the results given the Realtor.com traffic and the SEO that we get. I'm going to bring this home. So any of you that want more help, more support, go to industry.realtor.com/ccpro. We call it our Content Pro site. It specifically walks you through many different topics. How do I do my profile on Realtor.com? All the different things. And then coming in July, we are migrating all the List Hub data into the Realtor.com dashboard. So you'll have one dashboard. If you can access Realtor.com through your dashboard, we will have all your List Hub metrics in there in one place. You won't have to log into two different dashboards moving forward. That's it. I brought a lot. I went quick. Ryan, thank you for having me, and I will stop sharing my screen.
Yeah, and we'll look forward to that apples to oranges presentation when we get that scheduled and out there. So thank you, Mike, for that, and thank you for being part of it. I do want to get into a little bit of my updates before I get to everyone else. So I'm going to hopefully share my screen in just a second, and we'll get into a couple updates based on the governor's announcements yesterday, and then we'll get into our other two guests real quick. So as always, our Zoomed In on Real Estate is sponsored by the Cooperative Bank Cape Cod, and so we're fortunate to have that relationship, and glad Charlotte is here to join us to talk about some things going on in the banking world and the lending world right now on that. So once again, I'll promote, we've had a ton of people take advantage in the remote world of the Cape Cod Real Estate Specialist designation. I would encourage you to continue to do that. If you're interested in learning more how you can do it, contact Whitney on our staff and she can walk you through it, or you can check it out on our website very easily at ccr.com/specialist. Our upcoming classes. So I'll talk about it in a second, but we're not turning live classes till September for several reasons, which I'll get into. But so through June, here's our online virtual CE classes. We do have two things scheduled, the Green Designation course and NAR's At Home with Diversity, both webinars you can take. They're on our calendars, and they conclude continuing education with those classes, as we're partnering with other local associations to run those right now. And so they're available, but also our other CE classes every Wednesday at 1 o'clock through the end of June. And so take advantage of those. So what the governor announced yesterday was capacity and mask mandates, capacity on businesses, all business operations, and ends May 29th. So at that point, we'll be back. So we're starting to schedule in-person MLS tours back on not July 1st. Sorry, I put that wrong. It's June 1st. Sorry for that edit. It's June 1st. So you can go on the week of June 1st as you're prepping listing presentations and look to put your houses on MLS tours starting June 1st. We'll resume in-person CE in September as scheduled. So there's various reasons for that. One is the scheduling of, yesterday, May 29th announcement was happened so that we did not know to be able to organize those quickly. We generally do not run live CE in July and August anyways. As we know, this summer on the Cape is going to be extremely busy. And so we didn't want that to interfere and the tenants be affected. So we're moving forward with September for live CE. We are changing and redoing how we do CE and how much CE we'll have every month as we move more online in general, because we've heard that over half of you that have taken online CE want to continue to take that. And so we're going to work to implement that procedure going forward as well into our larger education plan. And then I want to be clear, the sellers or listing agents still have the right to require masks. Please be patient. Please be respectful of everyone. Everyone's going to have different levels of feelings and different levels of satisfaction. So I would encourage you guys to have open conversations as buyer's agents with listing agents around the expectations for that showing. Have them with your buyers, because everyone's going to have different comfort levels. And different brokerages are going to have different reopening plans and everything else. So just be respectful of everyone in this transition of how everyone gets back to what will be our normal going forward. So I just wanted to highlight that. If y'all have any questions on this stuff, please put them in the chat. A quick update on our market. This is I'm looking at year to date through April 30th. That's what I wanted to look at, because looking at April 2021 to April 2020 is not necessarily the great comparison because of the stay-at-home order last April. So I wanted to look at how the market's doing year over year. So what we have is, right, so you have, they're missed a little bit. So just follow me on this. So closed sales is up 11% through the end of April for the year. Median sales price up 37%, up to $600,000 for 2021. The affordability of homes are way down, meaning they're less affordable. And then homes for sale, I'm trying to see what that metric was. So that is not obviously month supply. That is another metric, and I'm trying to remember which one was. So I'm sorry for that presentation being put together. But here's some important things I wanted to talk about, right? So 40% of all sales in April were cash. Historically, we do about 20 to 25%. Even all of last year, in all of 2020, we were only at 27% in cash. And now we're up at 40% in the month of April, more cash. So what y'all are seeing out there is happening now. The numbers are reflecting it. And 52% of sales were above list price in April. So, you know, last month it was down in the mid 40s. Now it went up to 52%. So April is when we saw a big jump in closed sales of cash and above list price, which means that's what y'all were seeing in January, February, March for that close in April like that. But that also means that 48% of sales aren't closing above list price, which, you know, that's a really tough thing for you guys as buyers agents to be in, right? Like that's the problem I think that y'all are having, and the angst I'm hearing in the marketplace over those offers is that half of the sales are closing above list, half of them are closing under list. Which one is it? You don't want your buyers to pay more than they have to. So I think that's the tough thing as a good buyer's agent you're trying to figure out at this point. New listings are still way down, right? So while they're up from last April, they're down from where they traditionally were in 2019. And that's an important thing to look at. And they're down for year to date. I'm looking at this to say, when can we get new listing growth so that we can figure out how we can add inventory, right? And try to get out of the jammed market we're in. And so that the new listings per month is what I'm looking at with that. So that's what I have for updates, and I'm going to bring in now Charlotte Green. We're going to talk to you, Charlotte, about what's going on in the second home lending world, because there was a lot of changes with Fannie Mae that they've made around second home lending. And then after that, we're going to get into Christian Hoystrap from NAR to talk a lot about the proposed tax changes, what's going on out there, and how to make sense of all that. So Charlotte, how's the lending world today? How's the Cooperative Bank Cape Cod? Thanks for joining us.
Yeah, thanks for having us, Ryan. I guess the name of the game for the last year or so has been hectic. It's been hectic. It's been busy. Rates have kept us busy, and this new implementation from Fannie Mae and Freddie Mac regarding their second home buyback has really been a bit of a game changer. We're still in really early days of the consequences of that change. Just to give you a really kind of high level, as of April 1st, Fannie Mae and Freddie Mac have decided they're going to be limiting their purchase of second home and investment properties to no more than 7% of their portfolio. So what does that mean for buyers? What does that mean for our second home buyers, our investment buyers? It means that they're going to be potentially limited or have increased interest rates for their purchases. Reason being, people who are relying on their sales to Fannie Mae and Freddie Mac to continue funding mortgages, they're going to have to be within that 7% tolerance for their total sales. And a lot of people we're hearing are increasing their rates to somewhat slow that business and make sure they don't exceed that 7% tolerance.
Or if they take more risk, because they might have to hold it for a little bit longer, right, before they get in that Fannie Mae category. So if they're looking at portfolio or anywhere else, that kind of risk that they're assuming rather than being backed by Fannie is where they're kind of saying, I'll increase my rate. So if they do want this loan, I make a little bit more money on this loan.
Exactly. And I think the portfolio, people who are lending with their own money and have that portfolio access, that's where people are funding their loans. They don't necessarily rely on sale to Fannie Mae and Freddie Mac. So they're not going to have to increase their rates. They might choose to increase their rates, but that's not universally the case at this point.
Yeah, like the Coop, that, you know, y'all have been a big portfolio lender anyways, right? And so what have y'all seen around in your market around the second homes since April 1st?
Well, we're seeing that we're able to be really competitive with second home rate pricing, because those are loans we're choosing to hold on our books in our portfolio. And then we're using our saleable, so selling to Fannie Mae and Freddie Mac, for our primary residence purchase and refinance business. So we've kept our second home rates competitive, and we have not changed them to account for this, because, you know, we're here to serve the community, and we want to make sure that we're as competitive as possible. To be determined on what happens in the future, because Fannie and Freddie have not really told anyone what the consequences are going to be for exceeding this 7%. So people are a little bit, let's say, gun shy and taking proactive measures so they don't have big penalties down the line.
All right, and then Charlotte, so what else is going on in the rate world? What are you guys seeing out there as some of the things going on?
So I've been chatting with people in the business, and for second homes and investment properties, we're seeing their rates be, you know, an eighth to a quarter more over what they would have been without this imposition from Fannie Mae and Freddie Mac. So it's going to be really important.
But what are you seeing on rates in general? Like, what are you seeing come through with the purchases? Rates, because they've been really low, then they ticked up, and now they're back down a little bit again?
Yep, so they've come down a little bit after jumping up, where I'd say we're still in really historic lows. We're seeing purchases in the high twos for primary residences and some second homes, depending on the down payment amount. But the purchase market is where the rates have remained a lot more competitive, because Fannie Mae and Freddie Mac also implemented a pricing adjustment for refinance loans quite a few months back. So the purchase market rates, I would say, are still in the high twos, very low threes for most people.
Now, if someone now has to go to a portfolio second home loan versus a Fannie Mae home back second home loan, does that impact the down payment? And if so, what is that looking like?
That would be lender to lender specific. So those parameters, we're as low as 5% down up to, 20, 25% down, depending on the loan size. So those jumbo loans are always typically going to have a larger down payment. And our portfolio has been really great because the second home market here has been exploding. Like you said, prices are just skyrocketing. So a lot more people are falling into that jumbo financing bucket than they were in the past.
Yeah, I mean, even though we saw Fannie Mae and Freddie Mac increase their loan limits, right? It's up to like 555. You probably know it by the heart, right? For Barnstable County, much higher in Dukes and Nantucket. Are you, with escalating prices, are you seeing more? You're seeing more people have to move into the jumbo market?
We're certainly seeing more people in that jumbo territory with the increased prices. Those, what would have been, more high-end range, those are what our first-time home buyers and move-up buyers are purchasing. A lot of these second home purchases we're seeing are really nicely high-priced properties.
All right, and then so what is the impact to the buyer if they're having to move from a conventional to a jumbo? Like if they're, if they were going to buy it, like say 600 and their $50,000 down payment, they would have been in the conventional, and now they're buying 750 or something like that. What is that impact on that buyer? And what should agents be thinking about, especially in escalating offers, right? Because I think that's one of the issues, right? Like if you're putting in a loan in escalating, competing multiple offers, you might move from a conventional to a jumbo loan pretty quickly, right?
Yeah, it's really easy to fall over that threshold. So the thing that agents should be looking out for and buyers should be looking out for is making sure the lender they're working with is able to accommodate conventional and jumbo financing, and try to find out what that rate would be for both options, just to make sure there aren't any surprises down the line when they switch, when they need to switch financing, or if you have to get a quick close and all of a sudden switch lenders. That can be a really tough experience and a little bit of a, call it a road bump in the process for people.
So let's talk appraisals. What you guys see a ton of appraisals come through, more than any individual agencies. On the by and large, are you seeing issues with appraisals keeping up in this market?
I'm not by and large seeing appraisals come in low. So this time last year, or maybe let's say last April, there was a very different conversation where we were seeing a lot of low appraisals. Right now, we see so many properties going in over asking. So what we're doing is working with our realtor partners and making sure that when the appraiser comes to the house, that agents are there with the comp so that we know and the appraiser knows how that value is landed on for that purchase price, so that it's easier for the appraiser to support that value. By and large, we're seeing things come at or over asking for the appraisal. They do still come in low sometimes. We're working with our agents and our realtors to, find a happy medium and understand the why, because
can you talk about appraisal gap and what's going on there? Because I hear a lot of people, get worried about that, right? Like, well, my buyer still wants it appraised, but it's like, the bank still, depending on down payment, the bank still may give the loan even if the appraisal comes lower than purchase price, right?
Yeah, the bank will still give the loan if the appraisal comes in lower, but the key factor for the buyer is that we will only finance off of the lower of the appraised value of the purchase price. So if you're agreed on for $850 and your appraisal comes in at $800, our down payment would be determined based on that $800. And the $50,000 difference would have to be made whole by the buyer. So that's a conversation we're making sure to have upfront with people, that they're able to cover that appraisal gap if necessary. And then depending on the loan size, we are able to adjust our down payment requirements and get some mortgage insurance to cover the difference. So you might have started out at 20% down, and the appraisal comes in low. Maybe we change this to a 10% or a 5% down payment with mortgage insurance, and that down payment that you're going to put towards the loan is now going to the difference between the purchase price and the appraised value.
All right, great. All right, thank you, Charlotte. Anything else happening out there? Obviously, you're still seeing probably a lot of construction loans, a lot of renovation loans happening at quick pace as well.
We're seeing a lot of that. So I love the $1 million tear downs. People buy these beautiful waterfront homes, tear them down and build up, $4 or $5 million properties on top of them. Your next speaker is going to be talking to something we're seeing a lot of right now, the 1031 exchanges. People trying to mitigate their tax liabilities and upgrade. So that's a really
or get their 1031 done before it goes away.
Yeah. And it's been a learning curve. We recently did a reverse 1031 exchange. So the person did not have their existing home sold that they were using for that 1031. They were able to purchase the new one, hold title in an LLC, and then once that older property sold, use those funds as a 1031 and kind of put them into the mortgage transaction and recast their payments.
All right, great. Awesome, Charlotte. Thanks a lot for that update. It's great.
Thanks for having us, Ryan, or me.
All right, we've got Christian Hoystrap from the National Association of Realtors here to talk about what I've been getting a lot of questions about from agents, and they're seeing sellers kind of freeze, waiting to see what happens right now, right? Because we've heard the way people are putting it out there is the triple tax threat is what people are saying it out there, right? Christian, on the real estate side. So update us, what's going on in Washington? Where does this all stand? Because people tend to freak out when they hear things. What's happening in DC right now, especially along real estate taxes, but in general with the American Jobs Act and everything else going on up there?
Yeah, sure thing. Thanks for having me, Ryan. I'm on here live from Washington, and we just finished up our annual Realtor Legislative Meetings and Trade Expo just this last Friday. It was a 2-week virtual conference, which is normally an in-person event where we have 10,000 realtors flying to DC for NAR's governance meetings and for in-person visits with our members of Congress on Capitol Hill. Our conference, as I mentioned, went virtual this year, so we had nearly 30,000 realtors tuning to our programming over the last 2 weeks. Now that the conference is over and we've discussed our federal policy priorities, in the weeks ahead, we're asking NAR's designated federal political coordinators, otherwise known as FPCs, who are realtors that serve as appointed liaisons between NAR and members of Congress, to go ahead and schedule virtual meetings with their members of Congress to talk about NAR's federal policy priorities.
Yeah, and we've got, just to update everyone, I think you got an email last week. We've got a meeting at noon with Congressman Keating that everyone's invited to if they want to join in on that. We sent out sign up link to join last week. You can email our staff, or maybe Marissa can put the link in the chat for those that want to join at noon with Congressman Keating.
You got it. And, and so in terms of these meetings that we're having with members of Congress, including yours just here in a few hours, kind of the broad themes that NAR is pushing right now is making sure members of Congress understand, like, we need to address this country's affordable housing shortage. And we've proposed a number of kind of pro-housing tax incentives to help this, help solve this affordable housing crisis we're facing. We're also asking members of Congress to continue their support of the independent contractor status for realtors. And then we're also continuing to push for additional funding for fair housing enforcement to ensure fair housing for all across the country. So, so those are sort of our broader priority themes. And those are in response to kind of the big policy proposals that are moving through Washington right now, which, as you mentioned, Ryan, are President Biden's 2 infrastructure proposals, the American Jobs Plan and the American Families Plan. So these are 2 plans that include both traditional infrastructure and what the Biden administration calls human infrastructure, or investments in education and healthcare. Together, they cost about $4 trillion. And so when you propose policies and packages that cost $4 trillion, you have to find some way to pay for them. And so where NAR has come into play here is not only kind of pushing the message to members of Congress and the White House that, from our perspective, infrastructure equals housing. We also are a bit concerned about some of the tax increases that the Biden administration is proposing to help actually pay for these packages. So the broad things to take away from this and to know are that the 2 proposals as they stand, they are just proposals. They are frameworks. There is no legislative text in either the House of Representatives or the Senate right now that would actually create a legislative vehicle to move these proposals forward. So essentially what the Biden administration has done is they've kind of teed up the broader themes and goals and a framework that they want Congress to push through. And it's up to Congress to now figure out, like, the actual details. And so that's kind of where NAR, our lobby team, our policy team, and all of our realtors through grassroots communications, through these like congressional meetings we're having, like the one you're having today, that's where we kind of come into play. So just in terms of a time frame, y'all should be aware that the original goal for passage of these plans was July 4th. That's not going to happen. From what we can tell right now, it looks like the lower chamber of the House, they're aiming to try to get a package together and through the House to be sent on to the Senate, hopefully by the beginning of the August recess, August 1st, maybe toss the package over to the Senate for their consideration during August or further into the fall. But it really doesn't look like that any of these packages are going to move or actually be legitimately voted on until sometime late summer, maybe push that into the fall. And so, yeah.
And there's like 4 taxes that really affect real estate that are being talked about from what I understand, right? You've got capital gains,
yep.
You've got 1031, you've got carried interest, and you've got estate tax.
Yeah. So I would say, like, the biggest concerns we have right now are not so much with the American Jobs Plan, which is like the traditional infrastructure. That's where Biden included like $213 billion in investments in housing programs. It's really the second plan, the American Families Plan. That's sort of like the social welfare programs for education and healthcare investments. So the way he's proposing to pay for that second plan includes a number of tax increases that we have concerns about, including, as you mentioned, limiting the deferral of like-kind exchanges to $500,000. So that, for us, that's a big problem. And fortunately, though, we have been educating members of Congress on the economic benefits of like-kind exchanges for months now, because Biden had proposed potentially using the elimination of 1031s during the campaign as a pay for some of his programs. So he kind of gave us a heads up last year that this might be coming down the line. We've been in communication with the White House. We've been talking to members of Congress, and I'll tell you, when you actually talk to a member of Congress and explain to them the benefits of 1031 like-kind exchanges and how important they are to this industry, very quickly you kind of see it on their faces. You see these members of Congress say, okay, that this all makes sense, and this isn't probably something we should touch. Again,
question that came in is the $500,000 limitation per exchange or total?
It's $500,000, I believe, per exchange.
Okay, because I mean that's the interesting thing to me, right? Because they're talking infrastructure, and to me, 1031 is one of the biggest vehicles for investment property, commercial property, things that actually build that infrastructure they're talking about.
Yeah, absolutely. Especially on like the commercial side of things, as well, like-kind exchanges, that's huge for that industry. And so, I do want to emphasize though that, like, I can tell you our like lobby team, our advocacy staff, we're not in panic mode yet, but we are in a mode of offense where we really need our realtors across the country to start telling their stories in terms of how important 1031 like-kind exchanges are. I'll put in the chat box here, Ryan, after we're done, but we're actually collecting testimonials from realtors talking about just how important and how effective like-kind exchanges are. And so, we're actually collecting like kind of a story bank to make sure we have stories and realtors ready to testify about their importance. And then throughout all these congressional meetings we're having here over the next couple of weeks, we're citing the defense of 1031s as one of our priority issues. So, we're certainly on offense on this one.
All right. And then, so obviously that's a concern. And I think people get worried, well, what's going to happen to the ones that are already in process, right? The ones that, like the ones I've already used. If you've already used it, you've already used it, right?
Yeah,
like
that's correct.
That's the kind of thing. So if someone is worried about that, go ahead and do it now, right? Kind of thing.
Yeah. And like I said, it's not like, again, there's no bill. We don't have legislation yet, right? So, I mean, if this is going to come in, if they are actually going to implement this limitation, I mean, we are talking about later on this year. So like, you may want to think about doing it, sooner rather than later. But again, there's still no guarantee that this limit is going to be included. And obviously we're going to do everything we can to try and get that proposed limitation out of the actual legislative text.
And then obviously what plays into that, because now if you limit your deferral options and you end up taking cash, right, out of deals, now it impacts the proposal or what people are talking about with capital gains.
Right. So, broadly speaking, the Biden proposal also calls for the doubling of the capital gains tax just across the board in terms of households above $1 million income. And then one of the biggest concerns we have right now is the proposal from the Biden administration to actually tax unrealized gains at death. So it effectively repeals the step up in basis that's so critical for building generational wealth in terms of, folks inheriting property from, their parents, that type of thing. And so I can tell you, it's not just the real estate industry that's concerned about that proposal. You've got the farming community, for example. They're up in arms about this. And so you actually got the farming community and the real estate industry right now, both kind of pushing back on the Biden administration about those proposals because they could have such negative impacts upon both homeowners and farm owners.
All right, great. Because I think, these real estate issues get so in depth, right? Like, and, I think people are worried, oh, well, I've actually heard this for the seller, how to talk to the seller when they say, well, I can't sell right now because I don't know what my capital gains are going to be at the end of the year if I sell right now. And I kind of want to know that before I sell. And these bills will kind of trigger from that point on, right? They're not going to go back and claw back money, right?
No, they won't. They wouldn't be retroactive. It would be from either, they usually write in the legislative text. It's either like upon passage or, I think generally it'll start. They'll.
You and I have actually had this conversation. If they do raise capital gains, if they make it effective for the tax year 2022, it would actually spur a lot of inventory potentially in 2021 of people wanting to get out of the market.
That's correct. That's correct. So,
and I'm sure they've thought about that too.
Yeah, absolutely. So, I mean, we'll see where it goes. Bottom line, taxing capital gains at death would change over 100 years of tax law, right? It's just a bad idea. Same with 1031 exchanges. 1031 exchanges have been around in tax law for 100 years. So, I think we start from a pretty good position of strength in pushing back against this stuff. And, like I said, I cited the kind of like the farming industry as an example. It's not just us, right? It's not just the real estate industry and realtors up in arms about this. Like, it's going to impact potentially other industries. So I think we got a pretty good shot here at making our message clear and hopefully convincing Congress as they actually get into the details of this legislation, how best to actually pay for these proposals.
So the 1031, the step up in basis at death are the two big ones. And we kind of conceded that there probably will be at least a little bit of a rise in capital gains. And that's kind of like, don't raise capital gains is not really a winner right now among Washington crowd.
Yeah, I think that would be right. And it's really interesting because it's cutting across parties right now too. It's not just Republicans responding to the Democratic president administration. It's also Democrats kind of citing concerns here. Also, as you may be aware, Richie Neal, who is the chairman of the House Ways and Means Committee from Western Massachusetts, we have a terrific relationship with Chairman Neal. Many of these tax proposals are going to be going through his committee. He knows realtors. He understands our industry. Our advocacy staff has a great relationship with him. We have a great relationship with his staff who are going to be working through these details. So, we feel pretty good that we're going to be able to have real conversations about the impacts of these proposals. And Richie Neal is not one to just kind of plow through without worrying about unintended consequences, which is what we're trying to kind of highlight here. So,
we're not going to get everything we want, right? Like they're going to touch real estate taxes at some level. The key is to make sure it's not as bad as the first kind of thrown out there proposal.
You got it. And one could probably argue that the Biden administration kind of put forth something that they thought was as progressive as it could be, so that it would then be pared down into a more perhaps reasonable actual piece of legislation. And certainly Richie Neal is not, he's someone who is a pretty reasonable guy when it comes to this type of thing. And like I said, understands our industry. So we're, again, we feel pretty good that we're going to have good discussion about this, and hopefully we get to a place where, because if all these tax increases pass, obviously it would be somewhat devastating for our industry, for homeowners. So we're hoping that we're going to be able to limit a lot of the impact here.
And then the other thing that's interesting that some of the Democratic lawmakers are pushing the Biden administration to do in the bills, and they haven't done, and so I have heard some Democratic legislators say, without this change, I'm not supporting it, which is figuring out some kind of step up or some kind of raise of the state and local income tax deduction, right? The SALT cap. Which the Trump tax bill limited at $10,000. It's had a real impact in Massachusetts and other northeastern states, limiting your state and local income tax deduction to $10,000. That's also, some people are looking to raise that, right? And that'd be a good thing.
That's right. And certainly a good thing, especially for homeowners in Massachusetts, right? I think I just saw a Bloomberg survey that showed that I think Massachusetts ranks second in terms of the amount of taxes, state and federal taxes paid over the course of their lifetime. I think it was New Jersey number one, Massachusetts like number two. So what we're seeing right now is that, like, for example, New York I think is top 5 in terms of state and local taxes. Then I think almost the entire New York delegation wrote a letter to President Biden saying, we will not support your infrastructure proposal if you do not repeal the SALT deduction cap. So they kind of put forth an ultimatum. We're hearing similar sentiments from folks in Jersey, from folks in California, in terms of members of Congress. The reality, though, is if you were to repeal the state and local tax deduction cap for just 1 year, that's I think $90 billion. That's $90 billion that they have to pay for somehow. So the Biden administration has kind of said, listen, we're open to reforming the SALT deduction cap, but like, explain to us how you're going to pay for it. And so that's kind of the stalemate in terms of where we are right now. NAR has come in with more of like a compromise proposal saying, okay, if you can't afford to repeal the whole thing, then why don't we talk about at least, doubling the cap for couples who file jointly. We call it the marriage penalty, right? Because right now, individuals are capped at $10,000 and couples are capped at $10,000. So, there's from our perspective, you're penalizing married people. You should double it to at least $20,000. And so, that's, a somewhat more reasonable proposal and probably easier to pay for. So
yeah, because most tax things like capital gains and other things have the single and then the joint being about double.
You got it. And it just wasn't included in the 2017, tax bill. So that was, it's inconsistent with the way the rest of tax policy goes. So I would imagine we see some kind of adjustment to the SALT cap. I don't think you're going to see the full repeal of the cap on the deduction. Maybe we'll see something closer to what NAR is proposing here, but it's a lot of money to pay for, and they're already, as you can see, and as we've discussed, like we're already talking about ways to pay for this bill that aren't so great. So you repeal the full deduction cap, then you have to come up with other ways to pay for it. So again, it's President Biden certainly he has a tough job ahead of him here over the months ahead to kind of figure out like how to get Republicans on board who are just like starting from a position of opposition, and Democrats who are wary about some of these tax increases, and Democrats who are demanding things like the full repeal of the SALT cap. There are a lot of different interests that they need to navigate here going forward.
So are you looking at the first infrastructure bill being done by the August recess, or do you think it's going to spill into the fall?
So there are a couple different scenarios at play here. What we're hearing, and we actually, during our legislative meetings conference, we had a great session with the two senators from West Virginia, Shelley Moore Capito and Joe Manchin.
The most powerful man in Washington, Joe Manchin.
Joe Manchin, he is the man controlling Washington right now. He's the Democrats' 50th vote, and he's very moderate and likes bipartisan compromise.
And has a great relationship with the realtors.
Has a great relationship with the realtors and is a longtime friend of Joe Biden, right? That being said, his partner, his fellow U.S. Senator in West Virginia, Shelley Moore Capito, she is a more conservative Republican, but is also interested in bipartisan compromise. So basically what Shelley Moore Capito has done is she's worked with a group of more moderate Republican senators to basically put forth a $500 billion infrastructure proposal on traditional infrastructure. So like surface transportation, bridges, roads, broadband, that type of thing, right? And so there's a scenario here where where the Senate and the House come to a compromise on putting forth a traditional infrastructure package that moves more quickly this summer into the fall. And that's the package that kind of actually starts moving through Congress, and they put the families plan, that sort of social welfare plan, to the side for the moment while we figure out exactly how they're going to pay for this and which tax increases are actually going to be used to do it. So there is a scenario here where Biden says, let's at least try to get something done, and they split the package into two complete separate packages, whereas right now they're trying to tack on the social welfare side of things onto the traditional infrastructure to move it through as a full package. But it's becoming more clear over, as this this process is prolonged, it's becoming clear that it's going to be a very hard sell for both Republicans and moderate Democrats to actually move the traditional infrastructure piece forward if you're tacking on those social welfare components and these tax increases. So I think there's certainly a scenario where you see the traditional infrastructure package move before the American Families Plan and the investments in education and healthcare. If that doesn't come to play, there is a procedural move that can be implemented by the Democrats, this process known as budget reconciliation. So basically, any type of legislation related to the federal budget and related to federal spending in that regard, they can actually pass a legislation through Congress with just a simple majority in the Senate, rather than like the supermajority, the 60 votes it takes to overcome what's called a filibuster, where they can kind of gum up the works in terms of the legislative process. So there's a chance here where the Democrats just say, you know what, we're done trying to compromise in a bipartisan fashion. We're just going to push through everything related to like federal spending through a package that just gets the 50 votes from Democrats in the Senate, with the vice president casting the tie-breaking vote. So there is a chance here that Democrats go it alone, and this would be a similar process that they could take that the COVID relief bill went through back in March. So those are kind of the two scenarios at play.
Christian, also, I don't want to throw like a crazy one to you, but also, we've got the idea of what Charlotte just talked about with this cap on Fannie Mae on the second homes. I know NAR has been engaged in that and monitoring and working through Fannie Mae about what the impacts actually are, and they're trying to evaluate what those impacts actually are.
Yeah, I can tell you. So I certainly am not a policy expert on this one, but Ken Fears, who's our senior policy rep on GSEs, I mean, he's been all over this. I think, Ryan.
Yeah, I just want to make sure to know that NAR is looking at it too. It's not just something that's like, they're on top of this issue.
Yeah. Ken, we're talking about it on a weekly basis. We're kind of turning to Ken just to get an update, just to make sure that we're following it and reacting properly. And if anyone wants to talk about that stuff, Ken Fears will literally go into more detail than you've ever wanted on these issues.
Yeah, but I just wanted to make that kind of issue, regulatory issues, on the radar of NAR as well.
You got it. Yep.
All right, cool. Well, thank you so much for joining us. I don't see any more questions coming in chat. I want to kind of respect people's time and get out of here in an hour. So thank you so much, Christian, for joining us. I'm sure you'll put your contact information in the chat that people can contact you if they have more questions. And really, you are our point person for, if they have any question related to NAR, they can kind of come to you and you can direct them to the right person.
Yeah, absolutely. Even if it's a question not related to policy or politics or anything like that, I'm happy to serve as sort of a concierge where I can at least direct people in the right direction through our staff support.
Awesome. And also, just so that how important these meetings are with our congressmen, we have the one coming up with Congressman Keating at noon, which Marissa put the link in the chat for you to get on that. But I just want to have you tell everyone how important these actually are.
Oh my gosh. This is normally when we have our conference here in DC and we have 10,000 realtors come in, I mean, we literally take over Capitol Hill for a week. And literally legislative staff on Capitol Hill, they will go to work early because they know realtors are just going to completely shut down the metro to get to Capitol Hill. I mean, we have such an impact here normally in person. This virtual setting almost gives us an even greater impact because more people are able to participate, and we're able to sort of have more intimate conversations with members of Congress about these issues. And our biggest thing that we're trying to emphasize right now is that members of Congress, they hear about policy proposals all the time. The most important thing it is for us to do and for realtors to do is to tell our story about the actual real impacts that these policies proposed either from the administration or in Congress, the real impacts that they'll have on your businesses, on your clients, and on homeowners. They need to hear the stories because it's those stories that are going to stick in their mind when the actual policy proposal comes up in committee and they're like, oh, I had a realtor tell me about their 1031 like-kind exchange. Why on earth are we going to try to limit this program and the success of it? If the program's working, why on earth are we going to use it to pay for something else? So again, these are truly critical, and it kind of comes at a perfect time where there's no bill yet to pay there's no legislative vehicle to push Biden's plan through Congress. They're creating it now, so these members of Congress need to hear these stories so that when they actually start making the details, our input is in there and hopefully will impact what the ultimate bill will look like.
All right. Thanks a lot, Christian. We really appreciate you taking the time to be with us today, as always.
You bet.
And just a reminder, housekeeping I talked about at the beginning, no Zoomed In on Real Estate in June, and we'll be back in July as June coincides with our week of advocacy with the Massachusetts Associated of Realtors. We'll be having individual meetings with our legislative delegation throughout the whole week, and we'll get information out to you later this week on that. And as always, if you have any questions, reach out to me. I'm completely accessible on any topic you guys have. So don't feel hesitant of anything too small to reach out to me on. So that'd be great, guys. Let us know. And thank you, Christian, so much for joining us. I appreciate it.
Absolutely. Thank you.